where is the economy shrinking and where is it growing? The fitness industry is growing. It is healthily growing. And so that investment is going to continue to pour in because it is a growing sector.
This is All Things Fitness and Wellness, hosted by Krissy Vann. Together, we're uniting industry thought leaders and fitfluencers on the mission to inspire innovation and encourage people to live a life fit and well. It's time for our third quarterly fitness forecast, proudly brought to you by ABC Fitness. Today, our panel will dive into the current financial health of the fitness industry, explore the state of commercial real estate and the impact of interest rates, and discuss the integration of artificial intelligence and GLP-1s into health club offerings. Joining me in the studio in Chicago are Chris Smith, CEO of Fitness World Canada and Chairman of the Health and Fitness Association, and Khal, President of ABC Ignite. We'll also feature virtual insights from Mark Mastrov, Chairman of New Evolution Ventures, and Jeff Zwiefel, Executive Director of MIORA Longevity and Performance by Lifetime. First, a big thank you to our sponsor, ABC Fitness. With more than 31,000 clubs and studios, 542,000 coaches and trainers, and 38 million members in over 100 countries, ABC Fitness is the fit tech provider to the best in fitness. Visit us at abcfitness.com. Before we get to the panel, be sure to hit like and subscribe. We have new podcasts weekly featuring industry thought leaders and influencers. Plus, each Friday, we drop a new episode of This Week in Fitness. Designed for busy executives, we crunch the latest fitness business headlines in under 5 minutes. I'm your host, Krissy Vann, and this is ATFW. Our third quarterly fitness forecast. I'm so excited because not only are we live in the studio today, but we're also going to be having some industry executives weaving in throughout the show. But I am so pleased to have both of you. Khal joining me from ABC Fitness. Say hello and give a little introduction to what you do at ABC.
Awesome. Thank you, Krissy, for having me. Khal, I am the president of the Ignite platform at ABC. Been with ABC for 5 years. Love the industry. I grew up in the healthcare IT space, and fitness is just awesome. So looking forward to the dialogue today.
Yeah, I can't wait to dig in because I know that you have access to so much great data-backed solutions. So we're going to be diving into that throughout the show. And of course, CEO Chris Smith of Fitness World Canada, coming off the heels of a massive announcement, now chairman of the Health and Fitness Association, formerly known as IHRSA. Talk to me a little bit about taking on this post.
Yeah, thanks for hanging out again today. Looking forward to today's discussion, but certainly excited about the will of the people and the board's confidence in me in terms of being chair for the next year and just all the work that we can continue to do with Liz and the team at HFA. And yeah, just excited about it. It's definitely a great opportunity and looking forward to serving.
Excellent. Well, we're going to kind of kick it off with yourself, Khal, because I know ABC Fitness does have access to so much incredible data. So what is the temperature check in the industry? Because the last one of these that we did, we were off the heels of the Bloomberg report that started the year saying that things were rather flat. But I know I've been to a couple of the ABC talks that speak to a lot of positivity in the space. So what are you seeing on the ground?
Well, so just to give context, in North America, we have about 8,700 clubs. We see kind of north of 28 million members. So we have a perspective on how the industry is behaving. We out of the gate, we saw flatness on the joints. But this is on the heels of 2 very, very strong years. 2022, 23 were awesome. So the fact that we were a little bit, in line of 2023, that was actually good. And ABC, actually, we projected we were going to be in this state. If I fast forward to now, I checked the data knowing that I was going to be here yesterday. We're actually up 2.5% year to date. So I think we're seeing on the portfolio wide. Now, if you take it on a same store basis, it's actually a little bit down year on year. But holistically as an industry, I think there was a lot of activity in terms of, transactions, opening clubs, some consolidations and really acquisitions happening. But all in all, I think given that where we were in 2022 and 2023, I think the fact that we are where we are is actually, I would say, healthy. I mean, obviously we want it to do more. The other thing I would say is, which I think is fascinating, if you look at that portfolio in terms of who's representing, what are the members doing? If I look at the portfolio as a whole, it's about 50-50 of those under 35 and those over 35. Now, why is that relevant? Because we're seeing new joins are more tilted towards that 35 and under age group. And what that tells you, that cohort of people, they behave differently. So for instance, we're seeing them joining at the 65% clip, but also we're seeing a little bit of a tick up in cancellation. And you say, why? Well, that group doesn't want to, they don't want contracts, they want to be at will. So I think the data makes sense. And I do think the fact that we're seeing Q2 being a little bit healthier or year on year, I think that's a good thing. So all in all, I think, yeah, we're flattish kind of year on year on a holistic basis, but I think, we feel good about where the industry is from the data that we see.
Well, and I like how you tee that up because exactly that, the years post-COVID, we did see the mass uptick. So you're comparing to those years. Obviously for yourself, Chris, you operate HVLP in Canada. So what have you personally been seeing within your operations?
Yeah, I mean, personally, we're having a fantastic year. So I'd say we're probably ahead of the trends. I mean, the trends that Khal's referencing, I think, are in line with many of the other operators that I am speaking with. But certainly from my perspective or my lens in terms of my day-to-day business, I mean, we had a fantastic Q1. We've had a fantastic Q2. So it's a little bit different, but I also think, again, depending on what sector of the industry you're serving, your specific business model. So whether you're HVLP 2.0, whether you're luxury lifestyle, whether it be boutique, I mean, there's just a wide variety out there, right? And so I think we're seeing some different things in different segments. But, again, I think to Khal's point, I'm hearing a lot of positivity overall. And I do also think that a lot of the data that everyone looks to in terms of, dues and EFT will set you free and all the stuff that we think about from just the basic business metric. But there's also the ancillary revenue. And so there's a lot of club groups that are also performing much better when it comes to personal training or if they run day camps or whatever it might be. We're also seeing some additional ancillary revenue growth above and beyond what I think has been, call it the norm, being the new norm, call it post-pandemic, and kind of what we're seeing there. So I think a lot of operators are also finding ways to diversify their revenue.
And Khal, you were kind of saying there, acquisitions, consolidations, we have seen expansions in the space. So when it comes to the economic trends currently, when it comes to getting institutional capital, what are things looking like there for those various models?
It's changing how people are behaving. We were just at a growth council with some of our top clients, and it's changing the way they look at things. It's now double. If you want to open a brand new location from the ground up, it's double what it was pre-COVID. It's costing 2x. Obviously, interest rate is high. Rent is just off the roof. So it's really forcing people to think about, should we do an acquisition? Should we acquire an existing asset and rebrand it? I think it's changing the way people are thinking about it. And, is it slowing down, what would otherwise be a more aggressive investment? Probably yes. But I think people are being smart about it too. They're like, hey, maybe I do acquire something and then move it. And you get the membership base. But that equation has shifted. There are brands that I used to talk to before COVID where they're like, no way, we want to build it. We want to shape it the way we want to shape it. And now it's like, is it worth it? And the 3 million investment is now 6, the 5 is now 11, and these are numbers coming from our customers telling us, oh my goodness, like the cost of operating new locations is extremely high to get it off the ground.
Well, Chris, for yourself, this is a space you know well because after the shift post-2020, Fitness World Canada, you've grown and expanded exponentially. So when it comes to institutional capital, what are you seeing in the space? What are they looking for?
It's a broad question, right? So again, I think it really varies on your specific sector and what your business plan is or what you're attacking. But I mean, generally speaking, I mean, the folks that are really intersecting with institutional capital are usually trying to be a high growth company. So again, it just comes down to the cost of capital. And so back to Greenfield versus brownfield and what do I do and how do I grow? That's where that conversation continues to center around. I think for, people, say in my situation or what I would call medium-sized operators, right? I mean, I think the idea of basically funding growth through cash flow, right? Because there is no interest rate on the cash flow. So if I'm using it from a balance sheet perspective and using it, smart growth there, maybe you're doing a leasing line on the equipment, but you're still getting preferred rates because you're working with preferred vendors in the industry. Like there's still creative ways to, be successful and try to avoid the 2X that Khal's referring to, right? Like how can I be intelligent about my growth here and still kind of be mindful of what I'm trying to do? So that's kind of been our approach, is more or less kind of what I just described at a super high level. But I think institutional capital as a whole, when they're looking at investments with groups, it's what is their growth capacity, what is their, average AUVs and net present value, and they're, and again, talking about bankers, right? When we talk about institutional capital, so they're going to look at a whole bunch of metrics and really kind of get an understanding of, how businesses are performing. They're going to look at things you've opened in the last 12 months, 24 months, 36 months, and even beyond that. What are your mature clubs performing at? What is your white space in terms of your growth plan, your strategic plan? What does your human capital look like? Who's on the team? I mean, there's a whole bunch of factors that I think they look at when they think about, are they going to invest with these folks, or is this a business we're interested in? And I think Khal was going there a little bit where he says, that the viewpoint of like how people are viewing it, right? I think there's just a multitude of factors that people are looking at from the conversations I've been having with institutional capital and just different individuals about the market and what they're seeing and different things that are on the market or have been through a process, say recently, and just kind of how they're going about evaluating decisions. But I'd still, I guess I would just close it and say it's a very robust, talking point. And I think that there is still a high level of interest in a whole bunch of groups with all the different spaces in fitness, because it is a business that's growing. It's a sector that's growing. So when we think about, and I think we're going to talk about at some point about AI today and its implications on the economy and where is the economy shrinking and where is it growing? The fitness industry is growing. It is healthily growing. And so that investment is going to continue to pour in because it is a growing sector.
This episode is brought to you by ABC Fitness. Discover ABC Ignite gym management software and learn why it's the trusted solution for more than 8,000 clubs and 24 million members. Learn more at abcfitness.com. Before we get back to the panel, Mark Mastrov weighs in.
I think that the few groups that are in market right now are more regional players, not necessarily big companies, nationwide, worldwide, or franchise players. And I think they're working hard to attract, venture capitalists who will back their platforms to continue their growth patterns. I think the regional guys are not commanding quite high of a multiple as probably the more national players are. But, they're still in market, and I think they'll get transactions completed in the next few months.
In regards to the fact that you're not seeing a lot of acquisitions, would you be able to elaborate as to why that may be the case at the moment?
I just think a lot of people are holding on, not willing to sell. They have expectations to achieve a higher price than they might be able to receive. Capital, like you mentioned earlier, if you're going to buy something, you might have to borrow to buy, and you're paying 6, 7, 8, 10% money to borrow and purchase, and you got to build that into your returns. And so I think it's just been less of a market where you're trying to buy a mom and pop, a 1, 2, 3 store chain. And less are available, less are for sale that I've seen out there personally. But, there are some happening, but not many.
So as we look to the second half of the year, you spoke in the beginning there about this optimism in the industry when it comes to all sectors, aside from some of your CrossFits or F45s. Do you have that same optimism if things are kind of holding in place? As I know a lot of consumers are feeling a little bit stretched, but to your point, they're prioritizing their health and wellness.
Yeah, I mean, the HVLP has been pretty successful because they've been able to stay in a lower price point, which consumers can easily afford. I'm not sure that you can do much in life for, call it $15 or $20 a month, where you can access, millions of dollars of exercise equipment within a facility, take a shower, take classes, et cetera. So value for dollar is extremely high, and I think everybody can afford that. At the same time, labor is going up, costs of labor are going up, everything costs more from the standpoint of production and from consumer standpoint. So we're trying to battle, where do you spend your dollars and what's most important? Fortunately, health and wellness is in the top 2, 3, 4 of most consumers' minds. And so as long as we continue to deliver good product at an affordable price, I think the industry is going to thrive.
This episode is brought to you by ABC Fitness. Let's continue the conversation. I know within the conversation here, interest rates were lightly touched on, and we know that recently at time of recording, both the Canadian and European central banks have lowered rates. The Fed just announced that they were not going to, and initially they were going to say this year there was speculation there might be 3 cuts. Maybe now they're saying 1 cut down the line. Obviously, this is a speculative question, but how might these decisions impact
operations throughout the states, considering that rates did not budge and there might have been some thought that they may have been on the move down.
Yeah, I mean, I think it's a sign that costs will remain elevated. And I think you look at the trend that I cited earlier, that more younger people are getting into the industry. And I think it's creating a, back to Greenfield, Chris, to what you mentioned. You're seeing now, more boutique or smaller operations that are doing pickleball focused, kickboxing, right? You're seeing these specialties all of a sudden become of an interest because they know they can attract that 35 and under. And it's a smaller investment. So I do think whether directly or indirectly, it's kind of weighing on people and how they think about the level of investment. And I do think it's going to really encourage consolidation in our industry, especially on the enterprise side. And we're seeing that. I mean, our boutique business, which we serve via our GlowFox product line, it's growing. I mean, that side of the business is doing really, really well. So it's a sign of indirectly or potentially directly, but the interest rate is influencing people, along with the shift in demographic. That 35 and under is very, very present.
Yeah,
You
well,
can see it.
and especially what they demand out of the spaces too is so different.
Yeah, and they're wellness lovers. They're like, right? They want to explore things, and they want to do multiple things. They want to have multiple experiences. They want to do programming and PT, and they want to do functional training. And they want to work at home and in the club. It's really a very diverse group. They just don't want commitment.
Yeah.
You got to be flexible with that.
Yeah.
Fair enough. How about for yourself, Chris, with the rates? Because, 23-year highs.
I'm not an economist, but it is an election year in the U.S. So what does that mean? My opinion, it is my opinion, that we're still definitely going to see at least one rate cut, if not two, because it's an election year. And obviously the administration that's in place wants to remain in place. And so it's in their interest to do so. So I think at some point that becomes a talking point back to touting a strong economy and what they're doing for America and all those things. So I think certainly domestically that's what we're going to see. And then certainly internationally in terms of interest rates coming down and its effect. Yeah, I mean, again, it makes capital easier to get to. And so will that help facilitate additional growth across the industry? Absolutely. Can it help fund liquidity events across the industry? Absolutely, because the cost of borrowing money comes down. And so it definitely will stoke and provoke activity. So my hope and my goal is that the election cycle is that it's going to do it. And I just think that historically, if you look at election years, that's kind of been the norm. So that I think what I'd comment there.
Yeah, fair enough. I did start it off by saying it's speculation, so don't worry.
I'm
No
fully
one's going to hold you to these.
Yeah, I mean, I'm not an economist. I mean, let's
Yeah,
just be for
it's
the
how we
record.
let it in so that people knew. You touched on Greenfield, brownfield expansions. And when it comes to looking at locations, what data is most helpful for understanding the target market within a specific distinct market area?
Yeah, I mean, I think, lots of different groups have different approaches. I've tried to basically be as often as possible, right? I'm a small, mid-sized business. We have our 17 clubs, all in British Columbia. But how can I behave like a big boy, right? Like, what are the best practices that the best of the best do? So I partner with first-in-class, best-in-class, brokerage firms and analytical real estate companies that do some really high-level work. So we're taking a really deep dive at the, sociographics, psychographics, demographics of particular markets, really understanding the community. And at a high level, that's kind of, phase one. And then obviously got to negotiate. You're looking for great terms, but, I'll still go put boots on the ground. So what I mean by that is I'll go to an area where I'm considering putting a club, and I'll do little focus groups at Starbucks and meet with a group of moms and understand, do I need child minding in this club? And if I do, how big does it need to be? And then do I need a women's only area in this facility? Like, what is this community looking for? What is the population that I'm serving? And again, in my marketplace, it's a very diverse demographic, right? And so we have people from all over the world. And so whether it be driven by people's religious preferences or otherwise, back to the women's only area as an example, like how do I create safe spaces for people to be able to work out in and again, do so in a judgment-free way and be happy and kind of get after their day-to-day and, meet the members where they're at. So yeah, we look at a lot of data, but then again, I spend a lot of time in the community shopping competitors, but also just going in grocery stores. Say, how busy is the local grocery store, right? Like, what does it look like? Who are the people? And I'm not trying to be overly pre-qualifying in terms of like, what are the cars in the parking lot? But just what does the social behavior look like and how does that compare to another one of my clubs? And if I can make a comparison that this feels like whether it be something I've done in British Columbia or previously in my career, if I can make an association that like this feels like something else that went really well for me, then it's a much easier decision for me to make versus just making it, again, purely off of the data. Because there's just so much data now. You could say, oh, the data says it's a great site, so we're going to do it. Versus, is it? Right? And so sometimes for me, it's spending time there.
Yeah, fair enough. What about optimizing margins once you pull the trigger on that? Because you have to think of labor costs and...
Yeah, I mean, and the technology back to, from a financial perspective, back to where are people also spending, capital, it's just on the technology. So, whether you're talking about your apps or the Amazon One that's out there now and the kiosks and turnstiles, and certainly we're doing a number of different projects from a tech stack perspective, and there's other brands that I know are like already partnered with Amazon One, which I think is really interesting technology as well, and certainly kind of directionally where things are headed. When you think about kind of how to optimize labor from an overall financial performance standpoint. We teach our managers, right? It's your single biggest controllable expense line that they control, right? In terms of building a schedule and executing correctly. And certainly we give our teams budgets and those sorts of things and parameters to work through. But it's a huge factor for sure. And obviously the minimum wage is escalating. It's over $17 an hour now in British Columbia. And so certainly something that we have to deal with.
Really, Chris said it best. I mean, we don't play a direct role from an ABC business perspective, but we're seeing it. I mean, it's happening. And I think when we talk about AI later on, I think this is where, people talk about, and I'm sure you'll hit on, hey, is AI going to replace jobs? I think there's create efficiencies where you can control costs. You could do the same thing with kind of more concentrated skill sets. I think that's where it gets really interesting. But we're hearing it. We're hearing what Chris is saying from other clients, and it's just, it's real. I mean, you gotta do your homework. And data by itself is great. That might get you to a 60-70% certainty, but you have to kind of use some subjective measures and go do your homework to get to that 100% decision.
This episode is brought to you by ABC Fitness. ABC Ignite transforms fitness management, streamlining operations, enhancing revenue, and delivering profound insights. Built for innovative club operators, Ignite ensures efficiency and member-centric experiences. Learn more at abcfitness.com. Here are some thoughts from our catch-up with Mark Mastrov.
One of the things that we really discussed was real estate. And I know even before you and I chatted, there was recently an article in the New York Times that was talking about all this vacant commercial space, particularly in malls, great opportunities for luxury gym facilities to move into. So what are you seeing in regards to commercial real estate deals within the fitness industry and how things are looking? Because I know rates have been so high as well.
Yeah, it depends on the region you're in. I think the coastal regions have still been pretty aggressive on price, and landlords are still holding out for what they consider to be the right tenant. They're very focused on experiential because, online is continuing to drive a lot of, big box retailers out of business. So those businesses that have an experience needed, whether it's a Sephora, whether it's a gym, whether it's somebody that wants to come in and try something before they buy it, those are the type of businesses that landlords are coveting. And I think the fitness industry bodes well because they can bring anywhere from 750 to 1,500 people a day to a center. Provided it's got the right parking field, it's a huge attraction for shopping centers, whether it has grocery or a Target or a multi-use retail kind of a setting. So, but rates have still remained fairly high. I think that costs have continued to appreciate. CAM charges are going up exponentially. If you don't have a cap on your CAM, you might see a 5 or 6% increase per year on your base rent, which over time can be, exponentially difficult. So overall, I say it's lukewarm, not necessarily a great, retail market right now.
And on that note, are you seeing more brownfield or greenfield expansions or takeovers of spaces? What's the better option, especially when we do look at interest rates from the last announcement? It doesn't look like the feds are really going to budge.
Yeah, great question. I think that what we're seeing is a lot of greenfield. People are trying to fill holes and find sites, but they don't have to be for the fitness industry, main to main. You can take a B or C location because we're destination oriented and people will find you, provided you've got the right rent structure, the right parking field, the right area covered, and the competitive landscape isn't too difficult, then you can survive on a B or C site. However, we're not seeing a lot of acquisitions. There's a few, but not a lot. So from that standpoint, it's mostly greenfield.
The conversation continues. A thank you to our sponsor of the Quarterly Fitness Forecast, ABC Fitness.
So before we move on to kind of the latest news in the industry, I'm just curious, what part of the fitness industry do you feel like there is the most appetite for right now for investment? And we are going to be diving into some of them like AI, GLP-1s, but what do you think from what you're hearing, or perhaps a gut instinct of where there might be the most growth?
So we are looking at two trends. One, the geo expansion, right? International expansion is real. And I think obviously you think about it and you think about the bigger brands, right? The Crunch and Planet Fitness, Anytime Fitness is already well represented internationally. I think there is just an acceleration to just go international. And it's all over the place. It's Europe, the Asia Pac, it's happening. So that's a trend. That's important. And with that comes responsibilities like compliance and access controls. I think that area becomes really, really important. But really, I mean, the biggest one is talk about the intersection of wellness and fitness, and then GLP-1, right? The Ozempics of the world are kind of putting a spotlight on it. So I think that's happening. And AI, I mean, I can't wait to kind of talk with you about AI and what the possibilities are. We're in very early innings in the AI game, if you will, and just the possibility and the fact that we're all learning is actually very exciting to me. I think it's those three trends: wellness and fitness, international expansion, and then really the benefit of what can you leverage AI for in our industry is top of mind.
Yeah, we'll definitely be covering it. And to your point, we are all learning in real time because it's changing constantly as we go. Yourself, Chris, where do you feel?
Yeah, I think I would agree with all those. The one I would add or just expand on is just from a wellness perspective, you know, the term that's being thrown around on a lot is longevity. The term that I've been hearing Neil Spruce say for 2 decades is called play span, which is also now becoming a quote unquote hashtag buzzword that people are talking about. So yeah, I think people are just looking for ways to connect the dots. And so whether that be the hot and cold or the sauna treatment, to, you know, my really dialing in nutrition and people kind of thinking about that. You know, even people that are out there looking at the, you know, the Gary Breccas and the 10X and the this and the that and all the stuff that is available on social, right? That's hitting everyone as they're scrolling or doom scrolling or whatever version of it. But it is a real trend, and there is, you know, real science that's backing a lot of this that I think is what is factually moving the demographic that Khal is referencing. So that 35 and younger is very interested in the data, which rightfully so, right? Like, what do the facts say? Like, I want to make an informed decision. And so if the science and the facts say that this is what is best for you and this is going to create a scenario for you to create the most level of mental health and happiness and just overall wellness, then that's what they're going to buy into. And so I think that's what we're seeing now. And so I think that space is going to continue to grow. And we're seeing that now. Like, there's been a couple brands that have come out. I think we'll see exponentially more brands that are going to continue to open in that space that are just very what I would call longevity or play span focused, where like that's the sole focus of what they do.
Yeah, on that under 35, I think it was Lise Keeker when we had her on here, and she said it so well of that Gen Z demographic. And you're like, of course they're thinking this way, right? Because they went through 2 recessions, a pandemic, and also they're seeing the sins of our past when it comes to the obesity epidemic. It's their parents and their grandparents that are people that don't have the play span because of those choices. And I'm sure they're understanding there's data here. They don't need to live that way. So speaking of data, I'm going to read this right off. A new report from John Dunham and Associates, commissioned by the Health and Fitness Association, states that the fitness industry contributes $22.4 billion to the U.S. economy. How do these numbers reflect the broader economic impact of the health and fitness sector?
This makes sense to me. We did ABC, worked with IRSA at the time, obviously, HFA now, and we did a study with Deloitte that published in 2022 where we said and we did it globally, kind of what is the impact of fitness on the industry? And then at the time it was 20 billion of direct impact. They cited another 19 billion in indirect impact. So that tells you we're there. The other thing we didn't have during the pandemic, we couldn't rattle out, you know, how many employees do we have in the industry and what are we impacting? And then the real estate, right? Chris mentioned earlier. It's just like, these are amazing numbers that the report spit out. But the one number that stood out for me was, and they did this for every country, but for the USA, they said the cost to the economy of those of us who are active versus inactive from a healthcare perspective is $3,500 a year per individual. I mean, think about that. $3,500 costing the kind of the healthcare economy by being inactive. So if there is any motivation to get more and more of us active in our fitness and our health, that number right there.
Well, and to the point, we started the conversation, Chris, saying chairman, Health and Fitness Association. And obviously they do a lot of advocacy work on Capitol Hill in regards to the FIT Act. So how important is data like this to actually move those agendas forward?
Yeah, I mean, the advocacy is certainly the focus for us organizationally, but it's understanding that in order for that advocacy to be relevant, it's based on research and education. And so these types of reports from a research perspective are incredibly important to educating public health ministers in Canada, as an example. When we talk about Congress and the U.S. Senate from a domestic perspective, when we talk about partnering, and the WHO does a lot of great work on their own, but certainly helping them understand certainly our perspective in the landscape as we're seeing economically, and then certainly just politically, globally, constituents, right? Like all these people were elected and appointed, if you will, and so the will of the people. And just really helping demonstrate the consumer movement behind fitness and wellness and all that. So the Health and Fitness Association's responsibility is to connect those dots, which again, I think that they're doing a fantastic job of, and it's through partners like ABC who are helping, support and fund, like the Deloitte report as they spoke to in the recent report that you're referencing now. So it takes great partners to help kind of collaborate on this research, but I think it's an important part of, again, just educating individuals so that the advocacy work lands and it's hyper relevant, whether that be at the state by state level from a U.S. perspective, you're talking about a federal level, trying to pass the FIT Act. It's critically important that we continue to do this.
Yeah, and really being that key ingredient that actually could bring that number in healthcare down.
That's right.
Because we know that as an industry, but I think it has been interesting to watch, even in my time working in this space, how collaborative the message has gotten, and the fact that more and more voices are repeating the same thing, and ultimately that's how the change happens.
This episode is brought to you by ABC Fitness. Whether an expansive multi-location enterprise or a boutique club, ABC Ignite optimizes every aspect of your gym, enabling your team to deliver exceptional experiences to members. Visit us at abcfitness.com to learn more.
So artificial intelligence, I know you're itching to bite into this, Khal. How are tech companies implementing this technology? Because it's rapidly evolving in regards to capability at the exact same time it's rolling out.
It is absolutely growing like weed, and it is a very, very fun time to be part of this. It's a revolution, really. I mean, people want to call it evolution. It's actually completely new. And the one thing that I think we all have to be honest with is we're all learning as we go. This is really happening at a very high speed. For us, I think we're looking at it from, can it make our industry more efficient, and can we create a tighter relationship with the members? I mean, at the end of the day, that's really what it is. And we can get into kind of what those are. We're doing a lot of experimentation in terms of proof of concepts and things and hypotheses that we're laying out and trying to prove out. So we can get into what are some of the things we're doing. But really, it's employee efficiency is how do you make the business more efficient, the operation more efficient, and that member experience can become so tailored and so customized to their own experience, especially as you hit those, that group we've been talking about where they want personalized experiences, and AI could just be there. And I'll leave you with this. People talk about the technical side of AI, the algorithms and the natural language processing and this and that. It is all about the data, and with that comes a lot of responsibilities. I think if you're doing any business with anybody that's doing AI work for you, make sure you pay attention to compliance, to security, to what are they going to do to protect the data, because the power is in the data. I think years from now, we're going to look back and we're going to find all these advanced algorithms as commodities off the shelf, anybody can use them.
Yeah, fair enough. I know that you kind of lightly touched there, but what are some specifics that you're diving in from an ABC Fitness perspective?
So we're looking at a lot of stuff in the areas of analytics and insights, and it's changing the paradigm where somebody like Chris or people who can run businesses for Chris is today it's, you can hire a lot of analysts to go and find trends. So one of the things we are experimenting with is really having the model itself tell you what the trends are. So imagine you talking to your data. Hey, how did I do last month? Where did the growth come from? What deficiencies do I have? And then just AI helping you answer these questions and uncovering these trends that are so not obvious to you and to your staff. So I think that's an area that's very important to us. The other two areas that are really top of mind is employee efficiencies, right? It's just, one, it's an efficiency play. Do I need, 3 people at the front desk? Can we get better at that? And obviously the biggest one of them all is member engagement, retention, combining that with employee efficiency in terms of here are the cohort of members that could be at risk. You need to proactively engage, and we're doing that organically and with partners like V, which we've had now for a while. I think there is a lot of discoveries to be had there, but I can tell you we're doing all of this while keeping a very, very we're investing quite a bit in compliance and security in a holistic way. This is not just physical security. It's how do you protect your data and making sure it's giving you insights and your insights only. Because we have customers that trust us with their data, and we cannot.
Yeah, breach, and that's more than a PR nightmare for you.
We cannot mess with that.
Yeah. For yourself, Chris, how are you looking at implementing, or what tools have you already started to play with, and what are you entertaining?
Well, I'm certainly paying attention to it. I mean, I think the thing that Khal talked about that I would even echo is that we're all learning. And so again, even for myself, I can't remember a time where there was anything available to me where I was just curious to experiment and learn. And so again, I think it's touching all areas of the business. So if I want to create a strategic marketing plan, learning how to be your own internal prompt engineer, right? So a lot of these big companies are hiring people to do this. But again, if you can learn how to do prompts and learn how to edit and modify and be thoughtful in the way you do it. And again, I would even say I think the average person is also very naive to the power of these tools already in terms of what you can ask it to do from a prompt standpoint, because I've been, doing some of my own kind of homework there specific to what I would just say be probably marketing specific focuses on some, tasks and things I've been kind of working through just to kind of do my own learn. But I think for me and for a lot of businesses, right, at the end of the day, it's about delivering world-class customer service. And again, in our business, we talk about meeting the members where they're at and how do we do that. And I always define that by how do you do world-class customer service, and that's by exceeding a customer's expectations. So if I'm going to exceed a customer's expectations, what is AI going to do in terms of changing the customer's expectations over time? And that's not going to be just specific to the health and wellness, the fitness space. That's going to be, how does AI impact them at the movie theater? How is AI going to impact them at getting their morning coffee wherever they go, right? All those things are going to shape what they expect that new relationship to be based on what that technology can do for them also in other places. So the industry as a whole won't have a choice other than to invest and kind of do some intelligent investing. But again, yes, protecting the data, having the appropriate investments in cybersecurity and all those types of things to protect, all the data and the information that will be kind of moving across. But it's an incredibly intriguing space. I do think again, I don't think for me right now, do I think it's going to negatively impact and take away any jobs inside of, fitness world? No. Do I think that it's going to make my team better and more efficient? Absolutely.
Yeah, that's exactly where I was going to lead into. And to your point about people being naive about the use of it or just not having an understanding, for myself, even in the world of content creation, it's like adding an exponent to your being if you know how to use it right. Because all of a sudden, instead of one person, you're now 5. And that's an incredible power to have. But what are your thoughts in regards to if it could potentially replace some jobs and roles? Because we do see models where there isn't necessarily a front desk staff, or I think of the boutique sector where labor costs could be a lot more challenging compared to an HVLP.
Yeah, I think we're a bit out before we kind of start replacing. I think Chris said it right. I think it's going to make you more efficient. Staffing in off hours, it could become more relevant. I mean, there are things you can also do, like when is the right time to engage with a prospect, with a member at their own best time. These are things that today you can spend hours trying to figure out. It becomes you snap your finger and it tells you what to do. So there's efficiencies all over the place. I don't know if we're going to see elimination of roles, maybe more concentrations, maybe you get more efficient with it. Plus, we're in the people business at the end of the day, and until that emotional intelligence is multiple step levels up, I think we're going to still need the good old kind of personable relationship with your members. I think that will always be there. But I think we're better off thinking about what Chris said. How do we make the member experience superb? And if you put that at the center of your decision making, then employee efficiency and business efficiencies becomes kind of to support that. And AI has plenty of tools to help us do that better. And then the last plug I'll have in there is revenue. So as a business operator in the fitness industry, I think the intelligent billing and really personalizing that billing experience, the collection experience for the members. So this is really meeting them where they're at. I think this will create happiness for the member. It'll create more stickiness of the member, and I think more revenue for the operators.
Well, I even remember having Bill Davis on here, and he often spoke to the frictionless experience. So to your point, it's only going to make that more efficient.
Absolutely, absolutely.
This episode is brought to you by ABC Fitness. Discover ABC Ignite gym management software and learn why it's the trusted solution for more than 8,000 clubs and 24 million members. Learn more at abcfitness.com. Before we get back to the panel, Mark Mastrov weighs in. Artificial intelligence, the conversation continues around that. And for yourself, what would be the tools that you have seen that you really feel that operators should be implementing, or at the very least strongly looking at this point?
It's early days, but there are a lot coming. There isn't a week that goes by that somebody doesn't show up on your doorstep with an AI offering. Marketing is going to be a big area where you can start to learn who that consumer is who's interested in joining your gym or a gym, and to be able to identify, locate them as they're in that process of thinking of joining. So AI is going to be able to help you identify, market to, attract, drive inside, either buy online or in store. So that's an interesting opportunity. Software is being developed around personal training, of course. So there's a lot of intuitive AI programs now that are showing up to help people train and exercise. So that's becoming more interesting. And then you've got a lot around healthcare. There's a tremendous amount of AI interaction around healthcare to help get people to move more, be healthier, and to bring that process into the gym space as healthcare companies are looking to drive down their costs by keeping people out of the medical community. So I think that's all there. A lot more to come, but it's early days, and we'll have to see what kind of evolves over the next probably 1, 2, 3 years.
This episode is brought to you by ABC Fitness. Let's continue the conversation.
Well, GLP-1, we couldn't even get through this whole conversation on the finance side without it coming up, because it's one of the, you can't open your phone without Ozempic or Wegovy being advertised to you in any capacity. JP Morgan estimating that 30 million people will be on these medications by 2030. Obviously, we've seen a couple players in the space, but how can the fitness industry continue to leverage this trend, and why should they?
Again, I've already been on the record on this topic, and it's interesting because I would say of all the things I've ever posted or said that have been shared, it's the only time I'd say I got any kind of viral reaction from people saying he's just flat dead wrong. So I guess maybe I'll clear the record today. I am not anti GLP-1, and I'm certainly not anti pharma when applicable, when appropriate for the right person. What I do think is that, again, what I would say is I think a lot of people are, I as a personal trainer, I used to sell personal training, right? I started this industry as a personal trainer, and I would say to my clients, if there was a magic pill that I could give you that you would take tonight and you'd wake up tomorrow morning and you'd be the 30 pounds lighter that you're sharing with me today, you'd feel the way you want to feel, et cetera, would you pay me $3,000 for the pill? And the answer was, well, yeah. It's like, okay, bad news is there is no magic pill, but the good news is if you make this investment, if you're disciplined to the program that it provides you, it will cost about $3,000, but I will make you look and feel and get you where you want to be. It's just going to take a little bit of time. Yeah, right. It's just going to take a little bit of time. And so I think just back to today's society and fast pace of go, 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 go. I don't want to wait. I don't want to work. I don't want to have to actually exercise self-discipline when I look at a plate. I mean, because that's what we're talking about. Like, what do these drugs do? What do? They suppress your appetite and make you not want to eat. You just don't consume as many calories. And then there's some additional side effects back to muscle wasting, whatever. So if I'm morbidly obese and I've tried to do a bunch of different things and maybe I've got even some genetic challenges that are pushing against me, is this something that can help me? Absolutely. Do I support that group of that cohort, if you will, in terms of should they go use this, or if it's applicable and do it, would I support? Absolutely. Do I think the average person, and there are a lot of average people that are running that direction, is that direction I think they should run? No. Because when I look at the pros and the cons of the risk to reward, it's like, look, through a little bit of time and discipline, you can get to the same place, right? And you look at the cost of of it, right? So the cost of it, and there's a lot of money there and there's a lot of investment being made, but the cost of it, 1 month's worth of dosage is more than a membership on an annual basis at even a luxury lifestyle club. So just like, I get it, and at the same time, I don't get it. And part of that's just how I'm wired, and I understand maybe I'm not normal in terms of my own personal level of self-discipline and approach to health, wellness, and fitness. But I just think that at this time, there's also still a lot of research as a whole other thing I would say. Like, I don't think we know enough right now to be really trying to prescribe and send it out to all the masses. And if we wanted to say, well, Chris, I mean, come on, we know enough. I'd say, well, if we historically look back at Big Pharma to say, when is it that they push go on something? The answer is as soon as they can, not when they've like, you know what I mean? Like that's that's capitalism. That's the model that Big Pharma has served as for a long, long time. So I just think that we need to exercise a little more caution. There's certainly a population of people that it's applicable to right now. I think they should get access to it. And again, I don't even think they should be paying what they're being asked to pay, if that's really the answer, right? That the cost is prohibitive to people that genuinely need it, right? And to think it's as expensive.
But the vanity industry will pay.
Yeah.
Well, exactly. And we know that from all sorts of other, vanity products and things that exist, right?
Yeah. Obviously, we've talked before that we're pretty similar in line on viewpoints on that one. We have seen, though, lifetime Equinox Taylor programs around this, specifically the muscle waste component being a massive one. And also, when it comes to a lifestyle shift like that, I don't believe that how you change mentally is going to happen at the same time. And you need to also be in charge of your results, even if you're taking that medication. What's the chatter that you hear? Because I know you work with so many clients in regards to entering that GLP-1 space and maybe some considerations that they're taking right now.
I think the best thing I've seen, and it's happening, is within our client base, is if this is going to invite a new set of people that never exercised before to start exercising, goodness. So how do we capitalize on that? Is that a 1%? Is that a 5%? No one knows. But I think it's there, right? Whether we like it or not, it's a trend that's there. I think education is key. It's what Chris said. If this has to us educating that alone may not be the answer, but if that gets the stigma of now I feel good about myself, that I want to engage in fitness and show up in a club and join my friends and family, great, that's a good thing. But how do we educate to kind of say, how do you sustain a lifestyle of health and wellness and fitness? I think that might be the area that we as an industry, we ought to spend time on, is kind of how do we put an education there, awareness out there so people can actually do it. And that's how you get them to stick. Look back at the Planet Fitness model. I mean, people look at Planet Fitness, from where they started. If you had a super high level kind of generalize, what's their biggest benefit to the industry? Is it used to be a 15% participation rate. Now it's 20-25%. So invited a set of people that wouldn't otherwise have engaged in fitness. Can this be the catalyst for the next 5%? Could be.
Yeah, I think the other bridge that even builds from what Khal's describing is because of the muscle wasting component. Again, that's where we can meet the members where they're at, right? And so I think the other bridge that is likely and would be incredibly positive is the bridge between the medical and then the health and wellness community. So doctors are also recognizing this issue, and again, client care and the Hippocratic Oath and all the things that they're doing in terms of like what does best care look like is to recommend and or even prescribe a gym membership.
That's right.
Right. And so again, back to what segment of the population can now get involved in the lifestyle that we know is so beneficial, not just from the physical attributes, but its impact on mental health and hormone balance and longevity and play span and all these other things that we're talking about. So yeah, I definitely think there is a segment there. And so again, it's not something I'm negative on, because again, if it's going to get more people to the table, I just want people, and I just advocate for, safe and effective, and the efficacy of everything that's kind of being looked at is just, paramount for me.
Yeah, and I don't even think it's a negative, because when you look at that number, 30 million people by 2030, let's face it, that translates to goodness knows based on how the cost fluctuates at the end of the day. It's a big paycheck for a lot of people. and everyone's trying to enter the arena and brand themselves to be associated. So I know it was Noom that was formerly Weight Watchers, tailoring program specifically. You've got Oprah endorsing that. So it's like the mother of the person that was all team Weight Watchers. And then Nestle just entered the arena recently. Let's face it, Nestle is not the epitome of health, but for a lot of their products, but they're trying to create tailored food lines around all of this. So to me, it does make natural sense. If any industry is going to step up to the plate and be associated with this one actually makes the most sense, because to your point, any lifestyle shift at the end of the day, like I know I've never had to go through a rapid weight loss, but I know that psychologically there's a lot that happens with that. And fitness facilities are the place where mentally you can improve yourself.
Well, I mean, the other angle and the buzzword, right, is everybody talks about 1 gram of protein for, every pound of lean body mass. I mean, when you're on this drug, right? Well, the reality is whether you're on this drug or not, you should be doing that. So,
yes.
That's probably lost on a lot of people, but that's just kind of key to like maintaining strong, lean, body mass. Some people want to associate that all with just say muscles, but when you talk about tendons, ligaments, bone structure, strength, like if people really understand kind of the physiology and human anatomy and how important, protein is to kind of their, diet from a macronutrient perspective. I mean, all that ties into that conversation, right? Which is, again, why wellness spaces and health clubs and whatever variety they serve in, most have some type of nutrition platform, right? Most certainly offer resistance training in the form of personal training, small group training, group fitness, whatever it might be. And or obviously there's just a workout floor where people can access their own workout on their own mobile device. So that's the important connection dot that we can play. And certainly we don't want to run from that. And again, we want to support all those people on, again, whatever journey they're on, meet the members where they're at is again, where I see it.
Yeah, and either way, people are going to be biting into this. So as they say,
it's already happening.
Yeah, it's already happening. Can't resist it.
Yeah.
We now take a pause from our in-studio chat in Chicago to hear comments from Jeff Zwiefel. Former president and COO of Lifetime, Jeff now heads the brand's spin-off concept, MIORA. Targeting the medical wellness market, MIORA longevity clinics pair personalized training and nutrition programs with medical and aesthetic treatments to help members reach their goals. They've been at the forefront of prescribing GLP-1s. Let's hear from Jeff now. We'll dive right in. I am so thrilled to speak with you because I know the longevity space, optimization of health, and of course, weight loss medications like GLP-1s are a massive discussion. And you've really been at the forefront of this in the industry. So talk to me a little bit from the investor perspective. What is the appetite in this space and investing in this space?
Yeah, it's a great question. Thank you, Krissy. Great to be with you today. I think we start with the reality that longevity clearly is a boom topic. It's currently a $7 billion category with over 200 million consumers, and it's expected to grow to 183 billion by 2028. So personalized medicine is on a fast growth, and people are prepared and looking to spend money on their well-being. So you look at these significant trends and you use, for example, ice bath searches growing more than 500% from 2022 to 2023. So recovery and wellness are hot topics. And there's this converging trend that's integrating the highly dynamic categories of recovery, rejuvenation, medi-spas, concierge medicine, and longevity. So you think about that. Longevity, we know, is here to stay. It's definitely not a fad. It's a concept that people felt at first with snake oil, and now we're getting to see the real legitimacy that people are starting to see the science coming through, and that aging, can be shaped. So, for Lifetime, it's our opportunity to lead the way and continue to forge this position as the healthy way of life company, as a national leader, a trusted brand in the longevity space. We just believe we're uniquely positioned with over 180 iconic destinations and 1.5 million members with disposable income that are already committed to spending on their own health.
Well, and kind of on that topic, because you're not wrong, as these were coming up, there is a lot of talk of skepticism, and especially when you're looking for institutional capital or investors, they want to know there's an element of risk in any investment, but they want to know that this is legitimate. So can you kind of recall in the early days when the MIORA concept was being spoken about, was it an easy sell for a lot, or was there that little convincing note that had to be woven in there?
Yeah, it's a great question. Thank you. I think, like you suggested, the early stages of this longevity and performance and anti-aging category, I think have had a level of, bad actors and snake oil that comes with a really high growth category like what we're seeing right now. So, it was really important for Lifetime to position itself again, really, and separate ourselves from the rest of the bad actors and make sure that we're legitimate and that we're doing things the right way based on the evidence, and that we work on the leading edge, but safely on the leading edge, and that's really why we've built our reputation for the last 30 years as a trusted and respected brand in the healthy living category. And again, we wanted to ensure that we make sure every step that we take in this MIORA performance and longevity program is consistent with what our brand and our reputation has been. So we didn't want to participate in anything that didn't have great research and science behind it.
Well, and this is actually an excellent lead into the next point in the fact, particularly with weight loss medications and GLP-1, they are a medical prescribed medication and therefore need to be handled as such. And obviously, a company of your reputation, very aware of this. So you did the collaboration with Dr. Jim Laval. How important was it to create a partnership like this before entering that space, especially because I'm sure there are a lot of health club operators that I'm sure want to implement these types of things. However, there's trepidation because there can be some very real side effects along the journey.
Yeah, I think you bring up a really exciting mega trend that's going on right now. And then first, like so many of us in the health and fitness business, I was skeptical, right? I had to personally, as an exercise physiologist, being in the business for almost 40 years, study this category really closely. And you look at, our current just horrific data around 80% of all Americans now being overweight and declining metabolic health markers. It's with the advent of GLPs as emerging as this really promising potential of dealing with this obesity epidemic, and clearly the research is showing its ability to influence appetite and control glucose metabolism. And so our approach was one that we wanted to make sure we leverage this just like any other tool. It can be used incorrectly, it can be used correctly. And we believe that GLP-1s should not be considered a shortcut to weight loss. And, but you certainly see the issues with all-cause mortality related to obesity and the remarkable impact this drug can have. So we wanted to position Lifetime with MIORA as an opportunity with GLP users to partner with our members and medical providers to create a comprehensive program of proper nutrition, exercise, nutrition, and resistance training, and measuring body composition to measure lean body mass, combining that with coaching, behavioral modification, and make sure that we have a safe and effective approach, a comprehensive and personalized approach. So our partnership, to answer your question, with Jim Laval was very important. We named him, announced him as our Chief Science Officer. He's involved in everything with Lifetime, from making sure that he's looking at our protocols, he's looking at our program development, our product selection, our practitioner selection, our training and certification of our practitioners, and all the way up through member education. So we need to make sure that we're focused, again, like we've always talked about, on studying the market, looking at the clinical research, engaging with organizations like the American Academy of Anti-Aging Medicine and making sure that we protect our most coveted asset, which is our brand reputation, and that we continue to build upon the 30 years of our trusted brand in this category.
Yeah, without question, that credibility is something that is earned over time. You do have it, and I'm sure that there has been so much done to ensure stepping into this space that it was done right, done well. And to your point, I just on a personal note, as I've explored the space, I couldn't think of an industry that's more aligned to play in this space. I know everyone, when you look at the exponential growth financially that we are going to see, everyone wants a piece of that pie. I get it. It's business. But truthfully, the fitness industry, when it comes to what this is going to accomplish in regards to cost savings as well from chronic disease prevention, the fact that we can get more people moving, the fact that these do cause muscle loss, and so you can combat that through going to a gym. I'm a big fan of the fact that we're playing in this space, which I don't always necessarily feel over pharmaceuticals, but I'm just like, the magic pill everyone's been looking for in this case, a shot in a lot of instances, has been found. So very exciting. From the first opening of this pilot with MIORA, what are the expansion plans looking like now? How big has the consumer appetite been for these spaces?
Yeah, well, it's been tremendous, right? Candidly, our demand has been greater than our supply, which is, as you can appreciate, a high-class problem. It just indicates the reality that the consumer and our member are seeking out solutions and alternatives to live an optimal life, not, treating disease and preventing disease like, not treating disease in a break-fix model like traditional healthcare does. We surveyed over 400,000 of our lifetime members, and it clearly validated the fact that 95% stating that they're interested in wellness improvement, but only half of them are currently seeking that from their traditional healthcare providers. I mean, I think we all know the stats. It's kind of alarming when you think about it. And so we see this as an opportunity. 90% of our members said they're interested in longevity and performance to improve their own wellness. 83% of our members said that they're currently engaging in services and programs such as red light therapy, cryo, and recovery and supplements already. So it's a really natural extension of the Lifetime Healthy Way of Life brand. And we see this as an opportunity for us to do a hub and spoke model in all of our major markets, where we have a large deployment of clubs and members. Our member, as I said earlier, is a very well-educated, very affluent consumer. It's very committed and interested in continuing to spend on optimal health and their overall wellness. So we believe our opportunity to place these MIORA longevity and performance centers within an existing Lifetime destination, where we're already getting the foot traffic and the awareness of programs such as this, can be phenomenal ancillary revenue streams for us to drive more incremental revenue, more revenue per member, more revenue per square foot of our clubs, and continue to satisfy our members' craving to continue to improve their own health.
The conversation continues. A big thank you to our sponsor of the quarterly fitness forecast, ABC Fitness. Well, to kind of round out our conversation here, I'm not going to start with you, Khal, because I know I'm going to hear from you and then a special guest, quote unquote. But one of the big questions that's always asked in the industry is, how do we attract the other 80%? Again, a speculative question, because we've got these incredible, brilliant minds all the time that are continuously asking the question. But what do you feel could be the shift, Chris?
We're going to continue to look for additional market share, but I think even we talked about what the HFA's, mission and its three pillars are, right? So we talk about advocacy, research, and education. So I think that we need to continue to advocate. I do think that the governments globally have a responsibility to, serve their constituents in the best way possible. And that, to me, that's to make fitness as accessible as possible, whether that be from a Canadian perspective and allowing for, what we've been asking for years in terms of the tax benefits and people to write off memberships in the U.S., very explicitly and specifically the FIT Act that, has broad support, bipartisan support across Congress now, but still not enough to kind of push it over. And so we just need more people to realize like the overall cost to the government, back to the $3,500 and the health benefits, and like, where that money is. And that could be money that's then freed up for all these other great social programs we hear of, that where that money then could go be spent on a federal level, right? In terms of like what it could do for the overall economy and the ecosystem of people. So I think we got to continue to just be as accessible as possible. Again, I think when Khal mentioned earlier, like you see these new entrants with these different types of boutique, whether it be Zumba specific or kickboxing specific or whatever that be, or if it's mainstream clubs, or right now we started with HVLP, and then we hear about HVL 2.0. Now it's going to be HVLP 3.0, right? And what does that look like? And I think that's all in an effort to, again, just kind of meet the consumers and continue to broaden the scope and provide services. So, I think you're seeing more operators, they put in, again, partnering with Amazon, where they have Amazon lockers in the club, right? You've got clubs that are partnering where they've got little grocery stores in the front of their clubs. I mean, we're filming here in Chicago. I had an opportunity to visit the East Bank Club yesterday. They've done a phenomenal job, renovating that facility with Mel, and his role, and the team there has done some incredible work meeting the consumer where they're at. So they've transformed their facility to kind of meet today's member expectations back to how do you exceed those, right? So I think we can continue to do that as an industry, which I think historically we have, right? Go to the 80s, prepaid memberships only. Then we started doing EFT and dues, and then that's all people do. Then you look at, there's a huge segment of people that do biweekly billing now, and then people introduce annual enhancement fees, and then they use that money to constantly evolve and upgrade their equipment. So we've seen the industry continue to do that. And then again, the industry's continue to grow, as Khal mentioned, from 15 to 20 and now 25 in many places, certainly in North America. And so I think we just have to be open and accessible and just be as broad as possible.
Khal, do you want to start with your guest?
Yes. So Krissy and I were talking, and we were like, how about we ask ChatGPT what they think of the other 80%? So here's what ChatGPT said. To attract the other 80%, the fitness industry could focus on creating inclusive environments, offering personalized and accessible workout options, providing education, kind of like what Chris said, on the benefit of fitness beyond physical appearance, and promoting a positive and supportive community. Not too bad.
Not too bad. What's your way in
that
here,
sounded
Khal?
like me. Wait a minute.
Yeah.
Wait a minute. Is it listening? What's going on?
What's going on? So, yeah, exactly.
I mean, I just shared with you in my former reporter life, they actually now have an AI avatar of reporters that work on the 24-hour channel. So we won't even need you here next time, Chris.
Okay.
But I guess that means I also won't have a job. So
that might be a tough one for you.
When we talk about job elimination, don't really want to be the first to go. But Khal, what are your thoughts? Because I know obviously you work with so many clients and really just get this well-rounded pulse on the industry.
I love what Chris keeps saying. I think member centricity, meet the member where they're at. If you focus on member centricity and defining success in the context of the future member, right? Because 10 years ago, 20 years ago, if you asked an operator, hey, mobile apps started to kind of become a thing in 10, 15 years ago. And they said, well, can help me, optimize my staff, right? Scheduling, whatnot. Move to now, what are we doing with apps? Is we're helping members track habits, workouts, wellness, health. And if that becomes the norm, and we think about what do these prospects that don't participate need to participate with, I think if you meet them where they are, that's when they open up. And then I think the stigma of, am I good enough to go to participate in fitness? I think that goes a long way, along all the things that Chris said. The Fit Act is a big deal. I mean, and with just us realizing that fitness is actually a preventative, it's a healthy thing to have, I think will go a long way. I think what HFA is doing now, I keep thinking Ursa.
Yes, that's fair. It's fresh.
Yes, is actually spot on. Advocacy, education. I think that's exactly what we need to do. And then embracing these trends that are coming up, right? I mean, yes, there is a medical aspect that we need to let the professional manage and really be smart with, but education, embracing it in the right way, combining it with fitness, I think is the way to go.
Well, Khal Rai from ABC Fitness and Chris Smith, CEO of Fitness World Canada and chairman of the Health and Fitness Association, thank you so much for joining us here on All Things Fitness and Wellness.
Thank you.
Amazing. Look at that. We started at 9:33, 1 hour on the dot. I was watching.
You've just listened to the quarterly fitness forecast brought to you by ABC Fitness. At ABC Fitness, we turn the vision you have for your fitness business into reality. Discover our technology solutions for personal trainers, coaches, fitness studios, and traditional gyms and health clubs at abcfitness.com. Be sure to hit like and subscribe on our channel and wherever you are listening. We have new podcast episodes weekly featuring industry thought leaders and influencers. Plus, every Friday, we drop a new episode of This Week in Fitness. Designed for busy executives, we crunch the latest fitness business headlines all in under 5 minutes. I'm your host, Krissy Vann, and this is ATFW.